Hi Steph, so you are Senior Associate in Wills, Trust and Probate here at EMG. Tell me a little bit about you. How did you get into this job?
So I've been specialising in private client work, wills, trusts and all of that kind of thing for about 10 years now. I did my training contract as a solicitor at a top 100 firm in Newcastle, where I qualified into the private client team. I stayed there and worked there for a while doing that, moved down to London and worked in a firm doing the same kind of work there for a few years before I came back up to Newcastle and joined EMG at the start of this year.
Oh, came back home.
Yeah, exactly.
So in your words, I guess, what would you say wealth protection is? What does it actually mean?
Good question. I think it means... I think wealth protection is probably a much wider concept than people really think to start with. To me, it's all of the kind of strategies and tools that we can use to help people, individuals and families protect their assets. Any assets that are of value to them. It could be cash, properties, a family business, anything really, to protect both for their benefit during their lifetime and to pass on to their families following their death. It covers all sorts of things. It is wider, I think, than what first springs to mind. It can include making wills, which is really important for peace of mind in terms of kind of establishing what will happen to your assets if something happens to you, but also giving you the chance to choose actually who the people are that are going to be tasked with dealing with your affairs should something happen. That often goes hand in hand with kind of inheritance tax and estate planning. That might be something that is incorporated into your will, but it can also be things that you do during lifetime to kind of plan the way that assets are going to be passed on to your beneficiaries. Another part of wealth protection is taking out insurance policies or perhaps critical illness cover. Sometimes that's with an aim of just providing a pot of cash in case something happens to you. Sometimes it has a specific purpose. Often it might be to pay off a mortgage or perhaps to pay an inheritance tax liability if you're concerned that that's going to exist and your beneficiaries might not have any other way to pay it. And that would be, we would work and we'd expect individuals to kind of talk to us, but also work with other wealth protection advisors to make sure that they've got the right protection in place, the right policies in place, but also that it's set up in a structure that is actually going to protect it and make it so that it is really of benefit to the people that are left behind.
Yeah, that's a good point.
Yeah. Another really important thing is lasting powers of attorney. When we're talking about wealth protection, we're not just thinking about what will happen when you die, although I think that is often what kind of comes to people's mind first, but thinking about what would happen if something happened to you so that you couldn't make decisions about your own affairs and manage them during your lifetime. Putting lasting powers of attorney in place can be hugely valuable to both you and your family in terms of making sure that if you can't make decisions, somebody is able to do that for you and to be able to access your assets both for your benefit and your family's benefit while you are alive. And not just from a personal point of view either. Lasting powers of attorney are really important from a business point of view as well.
Yeah.
So, making sure that there are lasting powers of attorney in place can be vital to help businesses continue operating if directors lose the ability to make decisions.
That's a really good point, actually. We just think about kind of immediate family, don't we? But, if you've had this family business that is, been going for 20 odd years and then something happens.
And it can be a huge problem because often with businesses like that, there are maybe one or two people who are kind of making all the decisions and running everything. And if something happens to them, without powers of attorney in place, things can grind quite easily to a halt. And I think it is important for people to be aware that when we're talking about wealth protection, we're talking about a whole range of things like that. It's not just the very morbid what happens when you die, but it's kind of putting structures in place to protect your assets for your benefit, your family's benefit, other people's benefit kind of during your lifetime and then onwards after that as well.
Because I think it's a really good point, because when you think of wealth protection, I don't know about you, but you think of maybe like a room with gold bars just stacked in, like some cartoon style. Actually, wealth means, it could be a business, it could be your property, it could be a holiday home, whatever.
It can be any number of things, and wealth is very different to different people. So what is wealthy to one person might not be to somebody else, and also the assets which you consider important vary hugely between different people. I think the immediate assumption is that wealth protection is maybe for people who are very
incredibly
wealthy,
yeah.
But actually it can be of benefit to anybody to think about wealth protection.
Yeah, I think it's an interesting distinction to make, because when we think about wealth protection and inheritance tax, there's that general consensus of inheritance tax affects all of us, wealth protection maybe not, and that's not the case.
I think those two things are really interlinked, actually. And there is, I think you're right, a perception that perhaps some parts of that are not relevant to me or to particular people. But I think, some of the things that I mentioned earlier, lasting powers of attorney, wills, they are important no matter what your level of wealth might be.
And in terms of inheritance tax planning, can you share a few tips with us?
Yes, of course. So inheritance tax is a concern for nearly everyone, I think, and probably one of the most important things you can do is have a really good understanding of what your assets are, but also what the rules are in terms of inheritance tax. There's a bit of a kind of conception, I think, misconception. Well, I say misconception. There's a bit of a feeling that inheritance tax is complicated, and I think it is. The rules can be, but seeking proper advice about it can help you understand what the situation is.
Clarify.
And fully kind of understand what, if anything, you might want to do. So there are actually, quite a lot of reliefs available to everybody in terms of inheritance tax. Everybody gets what we would call a nil rate band, which they can pass free of inheritance tax on their death. Okay. For everybody, that's £325,000 as a starting point. And there's also an additional residence nil rate band, which was introduced fairly recently, which is up to another £175,000 per person. So the headline now is that provided all the boxes are ticked, a married couple could theoretically pass on up to £1 million before there was any inheritance tax to pay, which for a lot of people is going to feel like a lot of money.
Yeah, reassuring.
And if you have an understanding of your estate and of those rules, it may be that actually if you feel your estate will fall under that threshold or whatever the relevant threshold is for your circumstances, you may not be that concerned about inheritance tax planning. There could be things that it's worth doing in your will to make sure that you're definitely capturing all of those nil rate bands, but you might not be that worried during your lifetime.
Yeah.
If you are worried during your lifetime, if you're concerned that perhaps...
I'm a worrier.
And lots of people are. And a lot of people feel that inheritance tax is quite an unfair tax. They've worked very hard, they've already paid tax during their lifetime, and I think people do sometimes struggle to see why they should then pay more tax on those assets again once they die. And if you're concerned about that and you think that there might be tax to pay, there are things that everybody can do during their lifetime to kind of mitigate what their liability might be. I'll run you through a couple of the highlights, if that's all right.
Yes, please.
So a lot of people are aware that they can give away up to £3,000 a year. That's called your annual exemption, and you can give that away without there being any inheritance tax implications. What I would say is you can give £3,000 away. You can't give £3,000 away to lots of different people. You can give up to £3,000 away per year. Yeah, and if you haven't used all of it in a particular year, you can roll it forwards to use the next year.
That's interesting.
As well.
I didn't know that.
Yes. You can also give, separately to that, you can give up to £250 to as many people as you like in a given year, okay? But if one person gets over £250, you lose that exemption and it starts to eat up your £3,000. So you do have to be a bit careful, but theoretically you could be giving £250 to any number of people, okay? There are also gifts for weddings, which you can give free of inheritance tax. So parents can give £5,000 to the bride and groom with no tax implications, and grandparents can give £2,500, for example.
Good to know.
Yes, and useful for telling parents and grandparents, I think, if you've got a marriage coming up. You know, there's lots of little things like that. Another thing is, and this is potentially quite a significant relief, is you can make gifts out of your income. Okay, it's called gifting from normal expenditure out of income, and provided your income is more than you need to meet your own needs and provide your standard of living, you can give away any excess income, and that wouldn't be subject to inheritance tax either. And that can be, you know, if you're someone that is got a lot of income, you could potentially give away quite a lot of income. What I would say about that is there are some quite important requirements that you need to be aware of. So it does have to be out of income rather than capital. And you do have to be clear that you can maintain your own standard of living. You can't be giving away anything and then depriving yourself. But you know, provided you can demonstrate that and you're keeping good records, it's potentially a really useful relief.
Yes.
Yeah. And there are also some particular assets which attract reliefs from inheritance tax. So for example, we've got agricultural property relief and business property relief. And if you were to invest in assets that attracted those reliefs, they could potentially pass free of inheritance tax, whatever the value. So an example is investing in shares in a trading company, provided you own those shares for more than 2 years. So shares on the AIM market, for example, once you'd owned them for 2 years, they could pass free of inheritance tax. Just trying to think of any other little snippets.
This is great. This is great.
Another thing I think that is really helpful, because we have a lot of clients who want to make charitable gifts, both during their lifetime and through their estates, is if you're minded to make charitable gifts, any gifts to charity are free of inheritance tax. You never pay inheritance tax on those gifts. And if you leave 10% of your estate to charity, you actually can benefit from a reduction in inheritance tax on the rest of your estate. Brace yourself. It's not huge. You go from 40% down to 36%, but actually, you know, that can make quite a big difference. So there are lots of things like that you can be doing, anyone can be doing, that have the potential, particularly when you start adding them up and using them in conjunction with each other, can make quite a big difference. It's worth considering inheritance tax planning, because it can have quite a big financial effect on your beneficiaries if something happens to you.
Just when you were saying at the start of this conversation about the different strategies and tools, I think that as a phrase, it's like, what does that even mean? But actually, I can see you could combine A, B, and C, and that would...
Yes.
So I guess my last question I want to ask you is, what would you say to people who are nervous about having these kind of conversations with family, or, you know, even just thinking about their own estate and, you know, wills? Is there any advice that you would share with people?
Yeah, I think people are often nervous about discussions like that. And in actual fact, people just want to put thinking about it off for as long as possible. I think some people think it's morbid. I don't know whether maybe they think they're sort of tempting fate.
Tempting fate, yeah.
Yeah, I do think there is that kind of inherent feeling. But obviously, we would always say, as you might expect, it is worth thinking about it now. It's worth taking proper advice now. And it's never too early to do that. You know, it's not the case that you have to wait till you've amassed some huge wealth to start thinking about these things. And it's also not the case that wealth protection only kind of comes into its own when you die.
Yeah.
You know, there's lots that you can be doing that is helpful during your lifetime, as well as when you've gone.
Yeah, and I think that's really important to pick up on, isn't it? The fact that it's not just about when you pass, it is in your life too.
It really isn't something to be nervous about. I think it can feel like a big thing to start talking about, but actually...
Very grown up.
Yes, very, you know, it's very adult. Yeah. But I think, you know, the sooner you start thinking about it, and the sooner you start taking advice, the sooner you can fully understand your situation and make sure that you're structuring things as well as possible to provide for you during your lifetime, not just to kind of protect assets, but also with the various advisors, solicitors, accountants, financial advisors, to grow your wealth as well, and also to plan for your future. So, you know, to plan and provide for you and your family in your retirement, as well as if you should die. And, you know, the worst step, I think, actually, is making the first meeting, making an appointment for the first meeting. And people often come in to us, and at the end they say, it wasn't as bad as I thought it was going to be. Which is good to hear, although it's not nice to think that people are dreading coming to see us. But actually, I think the reality of starting to talk about things like this is not as bad as the thought of it.
Because we have you to answer all the hard questions.
Well, hopefully. And the other thing I think that makes people nervous is talking to their family about it, and perhaps maybe involving them or saying things to them that they think their family might not want to hear. But in fact, actually being honest and open with people during your lifetime, explaining what the situation is, and including your family and the people who will be left behind in decision making, so they understand what they will be dealing with. Exactly. And it's much more likely to avoid problems further down the line. You're more likely to encounter difficulty later if everything comes as a massive surprise to people when you've gone. But if you've taken the time not just to take proper advice and put these structures and tools and things that we've been talking about in place, but to kind of involve your family in what's happening with them, it just smooths everything over. It can flag problems that might crop up later so that you can deal with them at the time and they are less troublesome later. Because we're very aware as people that advise executors and beneficiaries in relation to estates, it is a difficult time for people. It's a very emotional time, and what you don't need in addition to that is to also be dealing with kind of horrible technical legalities that could have been fixed earlier. Yeah, exactly.
Sold. That sounds much less scary.
Good.
Thank you so much.
My mission is accomplished.
Mission complete. Thank you so much for talking to us.
Thank you.